This week, President Trump's announcement of sweeping new tariffs sent ripples through the US economy, sparking investors' uncertainty and triggering immediate shifts in the real estate and lending sectors. From construction costs to mortgage-backed securities, the after effects are being felt across the board. So how did this all impact interest rates, the real estate market, and investor strategies? Let's dive into the most important economic developments you need to know.
Mortgage rates update.
At the start of the week, the average 30-year fixed mortgage rate was 6.76%. But as market jitters over tariffs pushed investors towards the safety of bonds, rates ticked slightly lower, ending the week at 6.63%. Meanwhile, for real estate investors, the DSCR loans are steady at 7.88%. This modest dip might seem small, but it reflects deeper economic forces at play, especially risk aversion and inflation concern.
A DP National Employment Report.
On April 2, the ADP National Employment Report showed that private sector employers added 155,000 jobs in March, slightly above expectations. The standout was manufacturing, with 21,000 new jobs, marking a second month of strength. But not all sectors followed suit. Construction hired slowed down, and job losses were recorded in trade, transportation, and utilities, signaling a potential cooling in sectors sensitive to interest rate and supply chain pressures.
Bureau of Labor Statistics News.
On April 4, the Bureau of Labor of Statistics reported that the unemployment rate ticked up 4.2% from 4.1% in February. Despite the rise in unemployment, the economy added 228,000 new jobs, a strong showing. This combination could indicate more people re-entering the labor force, which may help keep wage inflation in check, a key factor the Fed watches closely.
Broader economic events.
Looking at the broader picture, the biggest macro story this week remains tariffs. The tariff announcements. The new trade policy targets multiple countries, leading to fears of retaliation and supply chain disruptions. Markets responded swiftly, stocks dipped, bond yield fell, and talk of stagflation resurfaced. For real estate, this could mean higher costs for building materials, potential delays in new construction, and investors flocking to safe assets, reinforcing mortgage rate compression.
A quick recap.
Mortgage rates dropped slightly amid economic uncertainty. ADP showed solid private sector hiring, led by manufacturing. Unemployment ticked up, even as overall job growth remained strong. And tariff news is reshaping market sentiment, with real estate likely to feel both cost and rate pressure. And just like that, these are all news. Thanks for watching. If you found this video helpful, don't forget to give it a like and subscribe for more expert insights on real estate investing. If you are ready to take the next step or have any questions, you can find my contact information and phone numbers in the description below. Feel free to reach out. I am here to help you succeed. See you in the next video.